Let's bring in our UK economics reporter, Lizzy, who's been looking at all the details coming through from the Bank of England this morning. Lizzy, good morning to you. How do you think this set of data is set to affect the Bank of England, to influence the Bank of England on policy? Because we've heard such a lot of fairly hawkish rhetoric, resetting market expectations around interest rates of late, and then we get an inflation print that comes just a shade below estimates.
Just a shade, yeah. 3.1% in September for consumer price growth. Economists had forecast 3.2%, so same as the August meeting. This is still significantly above the bank's 2% target. So markets had been pricing for a rate hike in November, probably does still buttress that narrative. It might inject a little bit of doubt, but markets will be thinking that they've probably read the speeches out of the Bank of England recently pretty accurately. The fact that it's still above the target does have serious implications for British households. The Resolution Foundation has been warning that this spike in inflation will weigh on household incomes at a time when the government's raising taxes, cutting benefits. But we'll be digging into exactly what drove this inflation 3.1%.
In many ways, given that it's slightly softer than expectations, it makes it really interesting in context of the signalling we've got recently, because it makes it more exciting for next week. As you say, it adds that element of doubt when we were getting very clear signalling we were going to get that hike coming. Does this have any implications for next week's budget?
Well, officials are saying that the Treasury is resisting pressure to unleash an expansionary budget because of the pressure that would put on the Bank of England to hike rates and the implications of that on the debt servicing costs. We haven't seen this tension between monetary and fiscal policy in such a long time, but we're hearing the plan is that Rishi Sunak, the Chancellor, will rein in the public finances now and unleash the spending much closer to the election.